Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
You can see that the top 0.001% has seen this staggering outsized growth. This is on the right. And then the number of households adjusted for inflation above 100 million, already very high, but at the 30 million, that sweet spot, where Moneta and other private wealth firms would operate and see the most growth, it's around that 30 million point. So quite a dramatic move in that. And then I think it's important to say, well, where is the stock market leverage being felt? And clearly that's being felt with the stocks. The top 1%, they own, but over 50% of their assets will be in bonds and stocks and mutual funds. Their other assets will be a much smaller share, whereas when you're in the bottom, 50% is basically your family house, your home, which represents the lion's share. So not that much participation in the equity markets, but a growing participation in markets and in private markets in particular, which seems to be driving a lot of this, I would say, irrationality that we're seeing in private markets today. I'd love to hear any thoughts just on this phenomenon around the retail investor moving in, whether it's to traditional assets or some of the non-traditional assets like the private. I know over at ILPA, you probably watch this in terms of the migration of private assets. Do you see that the media might depict it as a one-way street? It's just asset gathering without guardrails. How do you see the industry?
Well, we can talk about guardrails even, because we don't know yet exactly where the SEC is going to come out on this, specifically with respect to giving 401k savers more access to private markets. But we're still very early days. The fact that 401k plans today that have exposure to private markets is still in the very low single digits. So vast majority of savers in the United States do not have the ability to choose more exposure to private markets. So who's playing in the space today? It's Moneta's clients and a lot of folks like that. And they're more where they came from. So we know even the penetration in the private wealth channel, if you think of them as part of retail defined broadly, we're still early days even in that, even though it's growing very rapidly. So we see a lot of greater potential for growth here. And what does that mean, of course, for the institutional LPs that we represent? But I think the bigger point is there's a wave coming onto the shore, and we know it's coming and that there's nothing that will stop it. And it's going to fundamentally alter how private markets operate. It's going to fundamentally offer the returns outlook for private markets for everyone, retail investors included.
I think it's a really important point. This chart on the left is more important. Think, because it's a question of, well, where are people actually, how are they accessing it? The highly wealthy, the top 0.1%, they're probably not doing interval funds. They're probably going direct. They've got maybe co-investment opportunities. They're doing venture. They're above the minimum, say, for most private equity firms. So they're not in the kind of the target zone of what's being seen the sell-off. I would think it's the first movers, or the kind of the toe in the water is typically you would do a toe in the water through or an interval fund of some kind. And I'm just going to go down to the private market page, because I think this is the important part. If we're seeing this massive race out of private credit funds, and every day there's another marquee name seems to be kind of captured by the net of private credit question marks, and we see the high and mighty from the big banks suggesting that there's been this pattern recognition, comparing it to 2008, that there's that the geopolitics is a distraction. It takes that sunlight off some of the private markets. They can go back to being in the shadows, where they're much happier, you could argue. We've seen a few, we've seen Jamie Dimon speak about cockroaches in private credit. So clearly there have been some high level voices suggesting that there's trouble afoot. The interesting part is it doesn't escape their own firm as well, as also captured by that.